Since 2010, when Bitcoin was first created, Bitcoin's outperformed inflation, even after the bear markets, 97% of the time. Gold has only beaten inflation 54% of the time since Bitcoin was created. So actually, Bitcoin's still been a better store of value relative to inflation. And even in the last 3 years, Bitcoin's beaten inflation. So, gold maybe looks better for the last few months, but I don't think that really means Bitcoin's done.
Did you know that the most insane rallies tend to happen in bear markets? It's because a lot of people just get caught off sides. They come in late, they bet on the trend late, and then the market rips them a new one, goes back up, liquidates them, and then goes down. And this is why, I don't really recommend leverage trading and all that stuff, because you could be directionally correct, but the short-term movement can wipe you out.
Bitcoin has a funny way of messing with your emotions. 1 month it feels unstoppable, headlines screaming new highs, everyone suddenly a macro expert. The next month, doubt creeps in. The narrative shifts. People start asking if the magic is gone. Right now, gold is having its moment. It's shining again, and critics are quick to say maybe Bitcoin's glory days are over. Maybe it was just a decade-long experiment. Maybe it can't compete in a serious macro environment. But here's the thing. When you zoom out, the story changes. Inflation hasn't gone anywhere. Quietly, steadily, it's been eating away at purchasing power around the world. People still need somewhere to store value, somewhere that actually holds up when currencies weaken and policy mistakes pile up. So the real debate isn't about which asset looks stronger this quarter. It's about which one has consistently done the job under pressure. Tom Lee points to the data. Since Bitcoin launched in 2010, it has outpaced inflation roughly 97% of the time, even after surviving brutal bear markets that shook out weak hands. Gold, it's beaten inflation only a little over half the time during that same stretch. And even in the past 3 years, through aggressive rate hikes and tightening liquidity, Bitcoin has still come out ahead. According to Lee, a short-term rally in gold doesn't erase a decade-plus of outperformance. Markets move in cycles. Sentiment swings, conviction gets tested. Let's watch more clips from Tom Lee's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
Tom DeMark, who is our advisor on timing, since November, he's been saying Bitcoin would get towards 60, and Ethereum, he thinks, should bottom. Well, originally 2,400, but he says if it didn't hold there, Ethereum would bottom around 1890. So I think it touched it to the penny. He thinks we just have to undercut it once more, and then that's the low. Meaning we're really close to the end. But, sentiment seems a lot worse because it's happened in such a short period of time. And maybe it's happened without a bubble first preceding it, right? So we didn't have like some major parabolic rise before crypto prices started falling. Gold now, though, has gotten so big. I don't think people realize this, but gold's network value is 40 trillion. The S&P 500, excluding the Mag 7, is 40. So gold is equal to the size of the stock market. Gold is twice as large as Europe's stock market now. Here's the thing. Gold's intraday move on January 31st was 5 trillion swing. That's 4 times bigger than Bitcoin right now. So I think gold has gotten so big. Well, one, that's why people have been buying it. But it's gotten so big that I think it's hard to argue that it's going to keep doing well. Because if gold doubles in price now from here, and some people are saying gold can get to 10,000, then it's twice as big as the S&P. At Fundstrat, we wrote a research report like looking at the 5 reasons gold can go up. But of those, 2 of them would be bad for crypto. So one reason gold goes up is monetary easing. That benefits crypto. A second is geopolitical uncertainty. That benefits crypto. The third is dollar devaluation. That benefits crypto. But the next 2 don't benefit crypto. One is price momentum of metals. That creates FOMO. That's bad for crypto. And the last is if the monetary system is being questioned outright. Like if someone says, all fiat currencies are going to break down, that's really bad for crypto because crypto is digital money. whereas gold is outside the monetary system. So I think part of what's happened is metals have gotten so much momentum, and then all this talk about Japan and the move in the rates there, the surprise with the new Fed, all of that made people nervous about any monetary system, and that's why gold basically went up a lot. Every drawdown in Bitcoin, you're at the end when people give up on Bitcoin. And this time they're talking about quantum and Bitcoin's broken, or like gold's been a better store of value. So I think people are quitting. In the traditional finance world, there's more people saying they're glad they don't own Bitcoin versus finance people who own Bitcoin and are losing money. So to me, it's still a sign we're early because one, people have looked at the Bitcoin decline as proof they shouldn't invest in it, which I think means we're still early. It'd be different if people in finance were losing money in crypto and like rage selling it.
Yeah.
But the rage selling's happening more in the crypto world. Last year, I think crypto felt like a second rate story versus AI.
Yeah.
Right? Because people were buying anything AI related, data centers, even the Bitcoin miners. And then gold was just rising through it all of last year. And then suddenly gold really broke out to new highs and then went basically parabolic. And I think that was really painful for crypto people. I think that's more signs like that we're at the end of the selling, not the beginning. Because one, gold has not been a great store of value in its history. Actually, we just wrote a report on this at Fundstrap that since 1971, if you look at 3-year returns, gold has underperformed inflation 48% of the time. So in other words, if it's supposed to be a store of value, it should be outperforming inflation all the time. But half the time you own gold, you've done worse than inflation. Since 2010, when Bitcoin was first created, Bitcoin's outperformed inflation, even after the bear markets, 97% of the time. Gold has only beaten inflation 54% of the time since Bitcoin was created. So actually, Bitcoin's still been a better store of value relative to inflation. And even in the last 3 years, Bitcoin's beaten inflation. So, gold maybe looks better for the last few months, but I don't think that really means Bitcoin's done. I think anyone who's new to crypto should keep in mind every bottom is V-shaped.
Yeah.
So there has not been a single Bitcoin bottom that wasn't V-shaped. So if you're trying to time the Bitcoin bottom, and if you don't get it right, you've missed a big entry point. So it's actually better to hold it into a downturn than to try to time it. To me, I think risk markets are going to do well this year. There, of course, is going to be turbulence just like last year. But one, the most important is there's a new Fed. That's going to be dovish. The business cycle is definitely turning because the ISMs finally broke above 50 after 3 years below 50, the longest stretch in history. Inflation is cooling. We'll get another inflation report on Friday. But, on core CPI year over year, after Friday's report, it's going to be the lowest inflation rate since COVID. In fact, it's back to pre-COVID levels, 2.5%. So I think if we've been worried about inflation, that's really receding. We have a dovish Fed and the business cycle's turning. I mean, that's good for risk assets. And historically, that would be good for stocks and, of course, good for crypto. I think the crypto winter is it's either ended already or the latest is April. So I think we're almost through the winter.
This cycle feels different, and that difference is exactly what is making people uncomfortable. There was no wild euphoric blow-off top before the decline, no retail mania pushing prices into obvious excess. Bitcoin and Ethereum simply rolled over, quickly and without ceremony. Some well-known market timing models had been pointing to Bitcoin sliding toward the low 60s and Ethereum revisiting the low 2000s, even dipping into the high 1800s. Ethereum nearly tagged that level to the dollar. The idea now is that one final undercut could mark the true bottom. It feels heavier than past downturns because there was no bubble to blame, just a fast reset that caught investors off balance. Meanwhile, gold has been on a tear. Liquidity trends, a softer dollar, and geopolitical tensions have pushed metals higher while crypto has lagged. Gold's total value is now massive, comparable to major equity markets. When an asset that large starts trending, it attracts attention and creates fear of missing out. Momentum in metals can siphon capital away from crypto, especially when investors grow nervous about the stability of the broader monetary system. But every major Bitcoin drawdown has ended when people start giving up. Talk about broken narratives and lost relevance usually comes up near the end, not at the beginning. With inflation cooling, the Federal Reserve leaning more dovish, and the business cycle turning, risk assets are getting oxygen again. If history is any guide, winter may already be closer to spring than it feels. While Tom Lee focuses on the macro backdrop and long-term inflation data, Ben Cowen adds a crucial warning. The most explosive rallies often begin in bear markets, when traders are caught offside. Leverage can wipe out even those who are directionally right. In crypto, survival often matters more than perfect timing. To understand the structure of this market and what history suggests could come next, let's turn to Ben Cowen.
The first thing to recognize is that when we have euphoria, when we have blow-off tops by Bitcoin under euphoric conditions, Bitcoin tends to top somewhere above the terminal price. When Bitcoin starts hitting that terminal price, it's the reason to become cautious. It happened in 2011, it happened a couple of times in 2013, and it also happened in 2017, and then finally it happened in early 2021. That was the time to be cautious. Now, this cycle, Bitcoin did not go to the terminal price. But the reason it did not, and we can all say in unison at this point, is because Bitcoin topped on apathy rather than euphoria. If you go look at the social interest of Bitcoin, what you'll see is that it's most similar to 2019 when Bitcoin topped on apathy. It didn't top because everyone from retail was FOMOing in at the top. It topped because basically no one was FOMOing in. People just generally didn't care. This same phenomenon occurred in mid-2019, which was a top that Bitcoin formed 2 months before quantitative tightening ended. So this is familiar, even if it feels very unfamiliar. It has happened before. It's just that this time it's happening on a grander scale. All right? Now, in the same way that Bitcoin did not go to the terminal price in 2019, you can see that it did the same thing this time, where it doesn't really get close. Not even close. In fact, in 2019, when Bitcoin topped, the price of Bitcoin was around 13, 14K. At the time, the terminal price was double the actual Bitcoin price. Just like in 2025, Bitcoin topped at around 126K, and the terminal price was more than double that at 275. So in both cases, Bitcoin topped out about 50% of the terminal price. Now, what you'll notice is that despite the fact that it topped out before getting to the terminal price, it still eventually went below the realized price and below the balance price. Now, the difficult thing here is how do we know what would have happened if the pandemic did not occur? We don't know, right? We don't know for sure. But what is true is that after every euphoric top, Bitcoin first goes below the realized price, and then later it goes below the balance price. And when Bitcoin goes below the balance price, that is normally when Bitcoin bottoms. So Bitcoin bottomed in October of 2011. It bottomed right there in 2011 when Bitcoin went below the balance price. If you look at 2015, Bitcoin bottomed when it capitulated below the balance price. In 2018, Bitcoin bottomed when it went below the balance price. And then in 2022, Bitcoin bottomed when it went right to the balance price right here. Now, on the realized price, the balance price back then was 15.65K. We know that Bitcoin went about $100 below that, maybe $200 below that. So every cycle, every midterm year, Bitcoin has ultimately gone below first the realized price, and then it goes below the balance price every single time. The one scenario where Bitcoin topped on apathy rather than euphoria, it also went below the balance price eventually. So obviously we could debate what would 2019 have looked like without the pandemic? We can talk about a lot of things. But the fact is that every midterm year bear market has led to Bitcoin eventually going below the balance price before you get a durable bull market to all-time highs. The only other time in history where we topped on Apathy, we also went below the balance price during the pandemic crash. I'm not suggesting we are going to have a pandemic-style crash. What I am suggesting is that in 2019, we had an inverted yield curve that then uninverted, and then we had a crash. And it was because of the pandemic. This cycle, we had an inverted yield curve that recently uninverted. And I can't tell you the narrative for what it will be, but my guess is that it'll ultimately play out the same way. In the sense that there's a good chance that before Bitcoin gets a durable bull market to all-time highs, I would say there's pretty good odds that Bitcoin would drop below the realized price, which is currently at 55K. And the balance price is currently at 40K. Now, everyone keeps asking me, where is Bitcoin going to bottom? The reality is no one knows, right? No one really knows. All we can say, we can look at the charts and say, look, all the prior bear markets have been a little bit easier to manage. The first one was 93%, 94. The second one was 87. The third one was 84. The next one was 77. If you look at this, what you'll notice is that about every cycle, it tends to be about 7% better, right? So like 94, 93, let's just call it 93 to 87, then 87 to 84, and maybe not 7%, but that was only about 3%. But then the next one was about 7 to 8%. You know, is it possible that the next bear market ends up being about 70%? If it is, that would put Bitcoin just below the balance price. If it goes a little bit lower, it would put it below the realized price.
Every Bitcoin cycle has a personality. Some end in fireworks, others end in silence. The loud ones are easy to spot. Retail piles in, headlines scream new highs, and price races toward what many models describe as a terminal zone. That kind of euphoric excess marked the tops in 2011, 2013, 2017, and early 2021. This time felt different. Bitcoin did not stretch toward those overheated projections. It stalled far below them. Social interest data showed something closer to indifference than mania. Instead of topping because everyone was buying, it topped because hardly anyone cared. Apathy, not euphoria, defined the mood. That pattern is not unprecedented. In 2019, Bitcoin also peaked well below its projected terminal level, roughly around half of it, before rolling over. What followed is more important than the top itself. In every major bear phase, price eventually slid beneath the realized price and then under the balance price before forming a durable bottom. Those levels have historically marked the point where long-term holders feel maximum pain, and weak hands finally capitulate. It is uncomfortable, but it has been consistent. Today, the realized price sits in the mid-50K range, while the balance price is closer to 40K. No one can predict the exact bottom, but if prior mid-cycle corrections are any guide, there is a meaningful chance that Bitcoin revisits or even briefly undercuts those levels before launching the next sustained move toward new highs. As we wrap up, do you think we are closer to the end of this crypto winter or just getting started? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching. Don't forget to like and subscribe.